Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. And today, folks, we've got a real doozy from Curanex Pharmaceuticals Incorporated. It seems like this company might be having a little bit of a ride, and we're here to break it all down for you, so stick around. This is their quarterly report telling us how they've been doing over the last 3 months, ending the 30th of September 2025. Think of it as a progress report for investors and anyone curious about what is happening behind the scenes at Curanex Pharmaceuticals Incorporated. Now, before we dive into the nitty-gritty, a quick heads up. If you like getting these clear, no-nonsense breakdowns of financial news and corporate reports, make sure you hit that subscribe button. We've also got a fantastic community over on Discord, linked in the description below, where we chat about all things business and investing, so come join the conversation. Let's start by looking at the money side of things. Curanex Pharmaceuticals Incorporated is a company that is trying to make it big in the pharmaceutical world, focusing on botanical drugs. They had their big debut, their initial public offering or IPO in August 2025. This is a huge deal because it means they started selling their stock to the public. Looking at their balance sheet, which is like a snapshot of what they own and what they owe, we see some interesting shifts as of the 30th of September 2025. They had a little over $5.8 million in cash. That is a big jump from the roughly $148,000 they had at the end of 2024. This massive increase is pretty much all thanks to that IPO we just mentioned, along with some extra shares they sold later. It is like they suddenly got a huge injection of cash. Now, when we look at their income statement, or what they call statements of operations, we see what happened with their money over a period of time. For the 3 months ending the 30th of September 2025, they had a net loss of almost $955,000. This is quite a bit more than the $91,000 loss in the same period the year before. And for the first 9 months of 2025, their net loss was over $1.1 million. That is a big leap from the $215,000 loss in the first 9 months of 2024. A big reason for these bigger losses is their spending on research and development. For the 3 months ended the 30th of September 2025, they spent almost $678,000 on R&D, and for the 9 months it was pretty much the same at around $680,000. This is a major increase compared to practically zero R&D spending in the prior year. This tells us they are really putting money into developing new drugs, specifically for things like ulcerative colitis and skin diseases. They've also prepaid a massive amount, over $8.5 million, for future R&D services. It looks like they're gearing up for some serious work. The shareholders' equity section is where things get really interesting. After their IPO, their additional paid-in capital jumped from about $923,000 at the end of 2024 to over $16 million at the end of September 2025. That is a massive increase, and it directly reflects the money they raised from selling their stock to the public. They also have a lot more shares outstanding now, over 28 million compared to 24 million at the end of 2024. This is a direct result of their IPO and the subsequent exercise of the underwriter's option to buy more shares. Looking at the statement of changes in shareholders' equity, we can see the impact of these events. The equity section shows how the owner's stake in the company has changed. After the IPO, the additional paid-in capital section really bulged up, showing the huge amount of money investors put into the company. It's the primary driver of the jump in total shareholders' equity. Now, let's talk about cash flow. For the 9 months ended the 30th of September 2025, their operations used up almost $9.7 million in cash, but their financing activities, which is mainly the money they got from selling stock, brought in over $15.3 million. This means that even though they're spending a lot to run the business, they're bringing in even more from investors, which is why their cash on hand increased so dramatically. It's a classic startup scenario where they're burning through cash to grow, but they're confident they can raise enough to keep going. Let's talk about their business. Curanex Pharmaceuticals Incorporated started with a focus on health products and botanical medicines. Back in November 2023, they decided to really go big on discovering, developing, and selling innovative botanical drugs for inflammatory diseases. They even had a name change and a reincorporation, moving from New York to Nevada. This stuff can sound complicated, but basically they reorganized their company structure, which is pretty common for companies looking to go public. The big news here is their IPO on the 27th of August 2025. They then started trading on the Nasdaq Capital Market under the ticker symbol KERX. This is a major milestone for any company. Looking at their accrued expenses, which are basically bills they owe but haven't paid yet, they are fairly small. As of the 30th of September 2025, they owe about $10,000 in accrued expenses. And at the end of 2024, it was similar, around $9,000. These are pretty low numbers, which is expected for a company at this stage. Now, their prepaid expenses are a different story. They have over $8.5 million in prepaid expenses as of the 30th of September 2025. This is a huge jump from the little over $1,000 they had at the end of 2024. As the report mentions, a big chunk of this is for research and development. They're paying upfront for services they'll receive later, which makes sense given their focus on drug development. Other current assets were about $367,000 at the end of 2024, and by September 2025, this amount is zero. This is because these were mainly deferred costs related to their IPO. Once the IPO happened, these costs were moved to equity, so they disappear as an asset. They also have some lease information. They took over an office lease from another company, which runs until August 2026. They now have a right-of-use asset and a lease liability showing up on their balance sheet because of this. The lease liability is about $61,000. Now, for income taxes, Curanex Pharmaceuticals Incorporated hasn't made any profit yet. They have a lot of net operating losses, which means they can use these losses to reduce their future tax bills. However, because they don't expect to be profitable anytime soon, they've put a pause on recognizing these future tax benefits. They have a valuation allowance, which is essentially a reserve, to cover these potential future tax savings. This section often tells a story. Back in June 2024, they had a big asset purchase with a company called Duraviva. Duraviva sounds related because their top executives and family members are involved in both companies. Curanex Pharmaceuticals Incorporated bought intellectual property assets from Duraviva, including patent applications and research reports, for about $730,000, including cash and stock. They also took over a lease from Duraviva. In February and May of 2025, they took out $200,000 loans from an existing shareholder. But here is the good news. In September 2025, they paid back both of those loans with interest. So as of September, there are no more outstanding loan balances with this related party. This is where we see the real impact of the IPO on the ownership structure. They are authorized to issue a massive number of common shares, over 475 million, with a par value of just $0.001. After the IPO and exercising the over-allotment option, they had over 28 million shares outstanding. The common stock to be issued balance, which was $200,000 from a past subscription, was settled in September 2025 by issuing about 28,000 shares. So that is cleared. They also have preferred stock authorized, and recently in June 2024, they approved the issuance of 1 million shares of Series as super voting preferred stock. These shares grant significant voting power. A key detail here is that in November 2024, they did a 3-for-5 reverse stock split. This means for every 5 shares you owned, you now have 3. This is usually done to increase the stock price per S-share to meet listing requirements like staying on the Nasdaq. All the numbers in the report have been adjusted to reflect this split. So it looks like they had fewer shares before. They've looked at everything that happened after the 30th of September 2025, up until the date they filed this report, and they haven't found any other major events that need to be disclosed or adjusted in these financial statements. Now, let's talk about management's perspective on all this. They are focused on developing their lead candidate, FIDO-N, and they have a pipeline of 7 indications they are targeting. They are relying heavily on their expertise, partnerships, and a strong intellectual property portfolio. Here is a bit of a red flag. In early November 2025, Nasdaq notified them that their stock price had been below $1 for 30 consecutive days. This is a problem because it could lead to them being delisted from the Nasdaq capital market. They have about 180 days until May 2026 to fix this. They can do this by getting their stock price back above $1 for 10 straight business days, or by doing another reverse stock split. This is definitely something to watch closely. Looking at their general and administrative expenses, they went up quite a bit. For the 3 months, they were $273,000 in 2025 compared to $93,000 in 2024. For the 9 months, they were $466,000 in 2025 compared to $217,000 in 24. This increase is largely due to the costs of preparing for and managing their IPO and operating as a public company. The overall net loss increased significantly, as we saw earlier, mainly due to the R&D spending and those IPO-related costs. They are clearly investing heavily in their future. Their cash position has dramatically improved from about $148,000 at the end of 2024 to over $5.8 million by September 25. This is entirely thanks to the money raised from their IPO and the subsequent share sales. They believe this cash, combined with their operating plan, will sustain them for at least the next 12 months. The big question is what happens after that. They do acknowledge that they haven't made a profit yet and expect losses to continue. They have what is called a going concern disclosure, which means there is a question about whether they can stay in business. However, they feel that the strong cash position from the IPO helps alleviate this concern for now. As a smaller reporting company, they are not required to provide this detailed information about market risks. Here, they admit that their disclosure controls and procedures were not effective. This means they don't have strong enough systems in place to ensure that all the important information is properly recorded and reported on time. This is a serious concern and something they need to address. Again, as a smaller reporting company, they are not required to list out all their risk factors here. However, we know from the NASDAQ issue that there are definitely risks involved. This section lists all the supporting documents attached to the filing, like certifications from their top executives and the actual financial data formatted for computers. And finally, we have the signatures. This is where the Chief Executive Officer and Chief Financial Officer confirm that the information in this report is true and accurate to the best of their knowledge. So, what is the big picture here for Curanex Pharmaceuticals Incorporated? On the positive side, they successfully completed their IPO and raised a significant amount of cash, which is crucial for a company in their stage of development. They are clearly investing heavily in research and development, which is essential for a pharmaceutical company. However, there are some serious red flags. Their net loss has widened considerably, and they've admitted their internal controls over financial reporting are not effective. The biggest concern right now is the NASDAQ listing requirement. If they can't get their stock price back above $1 by May 2026, they risk being delisted, which would be a major blow. Their strategy seems sound with a focus on botanical drugs for inflammatory diseases, but the path to profitability is long and uncertain. They are burning cash, and while they have enough to go for about a year, they'll need to find ways to generate revenue or secure more funding in the future. For investors, this is a high-risk, potentially high-reward situation. They need to monitor regulatory compliance, R&D progress, and crucially, their stock price. Alright? That is our breakdown of Curanex Pharmaceuticals Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Are they on the right track, or are the risks too great? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And if you want more of these deep dives into corporate documents, be sure to subscribe. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.